But let's kick it off today with the comments from Fed Chair Jerome Powell, since that is what investors are closely following throughout the trading day. Now, in prepared remarks, Chair Jerome Powell said that more needs to be done to sustain the economy. He also went on to say that the economic path forward is, quote, highly uncertain. Let's listen to what he had to say.
Over the course of the next month or so, unemployment will peak. And then as we return to more normal levels of economic activity, it's a reasonable expectation that unemployment will start to decline again. And it may decline sharply, but it's also likely to remain well above the levels that we saw earlier this year and all through 2019 and 18, which were 50-year lows in unemployment. So it'll take some time to get back to where we were. I have every reason to think we can get back there. The economy should substantially recover once the virus is under control.
For more on this, I want to bring in Nicholas Economides, professor of economics at NYU's Stern School of Business. And Professor Economides, thanks so much for taking the time to join the show again. Let's start with the comments that we just heard from Jerome Powell, saying that the recovery may take some time to gather momentum. What did you think of his comments?
I think that it's a bit on the pessimistic side. At the same time, part of his comments were that a new additional stimulus is needed. And I think that on that respect, he is correct. There is an additional fiscal stimulus needed. And it would be good to have a reduction in payroll tax, something that the White House has been pushing. And additionally, the so-called infrastructure investment project program that has been discussed now for some time. I think those two things would be good to be in a stimulus package. But whether we need to wait until the virus is completely out of in control is very debatable. The virus might not be in control for another year. So we need to really be careful to balance the additional cases that we might have if we reopen with reopening, because the longer we stay closed, the more difficult it would be to get up to full employment, to get the economy to full growth afterwards.
Professor Economides, what do you think of the policies that the Fed, the monetary policies that have been put forth so far that we have seen over the last several weeks? I guess, what do you think of the execution of the Fed's plan so far?
I'm happy with it. I think that the Fed went out of its way to make liquidity available, unlimited liquidity available. So I think they have done almost all that was required of them from the point of view of monetary policy. But there is more fiscal stimulus required, and that's an issue for Congress and the White House.
You know, it's interesting when we talk about additional fiscal stimulus required. One thing that was raised was just about the debt and what Fed Chair Jerome Powell's thoughts were about the debt. Now, this is something that Republicans have raised time and time again. It's on track to surpass 100% of GDP this year. What do you think of that? How concerned are you about this? And is this something you think we should be worrying about, at least at this point of the pandemic?
I think the crucial thing here is to worry about how fast we should reopen. This is the crucial thing we need to decide. And we need to put down our facts and think about it seriously. So we cannot accept extremist positions that say, well, we need to wait until there is a vaccine. That's crazy. We will die in the process of waiting for the vaccine. So we need to think seriously of the economic impact of extra days or extra weeks in which we're closed, and the impact it's going to have on long-term recovery. I think that we need to spend as much as possible. I understand conservative people who might say, well, we are expanding the debt and that's not good. But when we are in this very dire situation, there is not too much we can do. At the same time, the Fed has artificially kept interest rates now low for over 10 years. And I wouldn't be surprised if they kept them low for many years more if we end up having a high bill for this debt. So it's a concern, but I don't think it's the present concern. And the present concern, I want everybody to focus on how many weeks more are we going to be closed? That's the crucial issue. And how many more deaths are we going to tolerate if we're going to start earlier, reopen earlier rather than later?
Professor Economides, you mentioned low rates. What about negative interest rates? We know President Trump has been pushing for them. He re-upped his push for them yesterday in a tweet. Fed Chair Jerome Powell saying that it's something that they're not considering at this time. What are your thoughts on that?
I don't think it's crucial. I actually don't think that's a crucial issue. It could be that it's okay. I mean, other countries have lived with negative interest rates for years. For example, Germany, and others. So it's not. It's not. I think that it sounds extreme, but it's not really such a big deal. I don't think it's a big deal if the rate is slightly negative or slightly positive.
And going off of that, just in terms of what we could expect, a potential recovery, I know you were saying another additional fiscal policy will be needed. What do you expect to see, or how do you expect to see the potential recovery play out? Is this something that we will see a quick snapback in the recovery, or is it going to take some time in order to get back to those pre-crisis levels?
It's very difficult to judge. I think that a lot of analysts say that it's not going to be like a V, but it's going to be more like a U, and so on. But in any case, I think the shape of recovery, in my opinion, is less important as compared to when we're going to reopen. As soon as we reopen, the sooner we reopen, the better chances for a quick recovery are going to be. But people have to really evaluate this, because it's clear that when we reopen, there will be more cases, there will be more deaths. So the politicians should seriously consider how they're going to balance the effects of recovery and long-term growth versus some new cases. They need to really seriously open the discussion on that, rather than remain on extreme positions. Some people saying we should reopen right away, some people saying we should wait until the vaccine.
Yeah, Professor, I want to drill down into some of the economic pain being felt really across the nation. Now, the Fed released a pretty concerning survey, and they were saying that almost 40% of households making less than $40,000 a year have lost a job in March. I mean, this is a very stark picture of who exactly is feeling a lot of the pain in the country right now. What are the economic implications of this?
Well, for a month, for 2 months, people can live on the subsidies of the federal government. But if we're going further than that, and we are going further than that right now, people are going to feel the actual pain. People might be still able to fulfill their basic needs for rent and for food and so on. But in terms of disposable income, in terms of money that they can spend on durables, that has disappeared. And that can have a lasting effect. So when I hear the Fed's chairman saying, well, there might be a lasting effect, I think that he might be talking about when are people going to feel comfortable again to buy a new car or a new television or a durable in general. Taking away the income for a period of time, let's say 3 months, significantly can have a long run impact on durable consumption.
And Professor Economides of NYU's Stern School of Business, thanks so much for joining us today.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.